Hey, welcome back to another episode of Johnscryptotherapy. Today we're going to look at the Omi token on the 4-hour chart. So it's really cool, guys. We're seeing a key level break at 0.0012. Very good structure. Okay, so we always mention this no matter what. Whenever I get into my charts or whenever I'm trying to teach someone, I always told you guys to follow one simple rule. If you take anything from my videos, do not enter a trade right off of an aggressive move. Do not enter off of a key break. You do not want to do that. You want to see a breakout, retest, and a confirmation to continue the trend. That's why I always label this charts just like this, guys, so you guys can see we want to see a key break, then a retest, and a continuation. This is how you could be a safe trader. We want to make sure the floors that we break. So the analogy is this, guys. Whenever we see a higher high, higher low, higher high, and we want to make sure the floors that we break, just like this, that is being respected when it comes back down. Because of course we do not want to buy at the top. We want to get a discount. We want to understand that this is the full move right here, and we want to put in our Fibonacci retracements. And as simple as that, you want to get into your Fibonacci's, go from the bottom all the way to the top, and you want to see a key retracement. Sometimes these retracements do land at a key zone. I do like the 50 retracement and the 61.8. Those are my key levels when I'm looking for some reversals. And if I do see a key level of support and resistance located on those levels as well, that is giving me confirmation, extra confirmation that this could be a strong structure. That means we could absolutely see a move back down, retest of structure, and go towards the top side. That is the formation of us seeing a move to the upside if we're looking bullish. Now take a look at structure here, guys, and it's very simple. We just got to look in front of us, and right here, guys, we have structures making higher highs and higher lows. This is a confirmation that price is going towards the upside. But once we did come back down, we were still looking for a bullish move, but of course it got rejected. We wanted to see price break above the previous structural high, but it did not. It retested around 0.0012, and that's a fatigue in price to the upside. That is showing us weakness. Once price did come back down, guess what? It wicked back up, failed to retest that structure back again, and failed to break a new high. So that means we were waiting for the structure and the bottoms to be broken, and once those bottoms were broken, we seen a confirmational retest once again of these wick rejections right here, guys. And this wick rejection was giving me confirmation that yes, eventually we are going to see one thing and one thing only, is that the sellers are in control. And we see that key breakout, and guess what? If I move this towards my right hand side, it does come back and use that as another level to find resistance and pop back towards the downside. This is what I try to mention, guys. Whenever we have a key break, we want to see a retest before we enter that trade again. Just like this, guys, we have a key break, a retest of structure, and we are following it up with a huge engulfing bearish candle. And I do want to make sure my engulfing candles do start at the very top of the close and engulfs the previous structure, but none other than the less, it does not do that. But if I go to a lower time frame, there might be an engulfing candle. The cool thing here, it is like the stepping ladder. When you look left of structure, we have structure going towards the next structure, and this is giving us that confirmation. The beautiful thing, if you are looking to be a Fibonacci trader or anything like that, you put your swings all the way towards the top and you see the rejection. And I even mentioned it right here, guys. When I talk about my previous structure, I look for the 61.8 and of course my key levels of rejections. And I even mentioned 61.8 is a key level that you need to make sure you put in your Fibonacci book. So right here, 0.61, 61.8 rejection level, exactly at a key level. This is a golden pocket for you to always look for your entry positions. This is already in profit. We're taking some great gains right here, guys, and we're going to be buying Omi at the very low price. Today is a special day. I'm going to be dropping some key informations about this structure, and I want to show you guys how the banks truly trade. Very cool, very interesting. If you guys are staying until this far and excited to learn something really cool, please make sure to like, share, and subscribe. I appreciate every single one of you guys for tuning in. I always do this because I love this community and I want to see you guys win. And I do want to take away some of my drawings just to show you guys exactly what price was doing at these key levels and moments. So let's take away this structure right here and this structure right here. So we're going to take the replay button right here and we're going to replay the button all the way here. So the cool thing is I did draw out a little scenario for you guys to see. This is what I like to look at when I look at banks. Banks do this very well, and I want to show you guys exactly what it is. And we're going to be doing the opposite. I just want to show you a bullish case scenario turning into a bearish, and I'm going to be showing a bearish case scenario turning into bullish. So right here we have prices going towards the upside. It does make a higher high, so it's coming from a higher high. It made a high, came back down, and this just broke a continuation. So this is break of structure, BOS, guys, break of structure. So it just continued towards the upside. So we did make a higher high right here. And once it did make a higher high, we do see prices coming back a little bit lower. We wanted to see price hold above structure so we can make another new high. But of course, we did not do that. We did break structure, and this is called change of structure. Keep that in mind, guys. Reasons why it's called change of structure and not break of structure is because break of structure is from a continuation. Break of structure is if we're seeing higher highs and higher lows, and that's a break of structure because it's continuating towards the upside. Change of structure is when we see break of structures turning into that formation to reverse the price action towards the opposite side. So change of structure is the mindset that we have when we're looking to reverse the ideas. So this right here is giving us ideas that we might not break the previous structural high. That means if we do not break the previous structural highs, this is what's going to happen. We're going to see a liquidation, and then guess what's going to happen? We're going to see a break back into structure. Everybody is going to look to buy. They're going to think that this was such a fake out that we're going to see rally to the upside. But of course, this does not happen, guys, and I'm going to be showing you guys key things on why this is such an important idea for a reversal. Change of structure. Once we have a break of structure and we see another move towards the downside and it does not make a higher high, but it breaks the higher low, we're seeing a change of structure. We're seeing a retake in towards the structural value and liquidate this zone before we look to sell. And I'm going to be showing you exactly what price did right here. Very cool concept, and I want to make sure you guys understand this very thoroughly. So let's get right into it. So right here, price is going towards the upside. We want to make sure price can make a new low previous to this low. So let's see what price is doing right here, guys. So right here, price has made a new low. So this is going to be the confirmation for me that we have a break of structure. This clearly broke below the previous structure. This is a break of structure. And now what we want to see is, are we going to break above this structure right here? If we break above this structure right here, what we're going to anticipate is aiming back towards this candle right here, and this is going to be my zone for a pullback. So what I'm trying to anticipate is price is going back up after it goes back down. So once it breaks a new low and we have a continuation, we want to see a break above the previous structure. This is giving us confirmation that the buyers did get a chance to break the previous structure, that we're going to see a pullback in towards this demand and supply zone before we see prices going towards the upside. This is the beautiful idea that we're trying to implement, the exact same idea that was been taught right here, guys, the opposite way. And if you guys do want another video on this, just alone on this, please make sure to comment down below. I will love to teach you guys this cool, simple strategy. So right here, we're waiting for structures to be broken. Once structure is broken, we're going to be targeting towards new levels. That is a break, but I do like to see the bodies break above structure, guys. So we're going to wait until bodies come out, and there you go. That is the break of structure. So now a lot of people, what are they going to be doing? They're going to be looking to buy right here. Reasons why we have a break of structure, they're going to be aggressive, but we as professional traders and trying to be, we understand one concept and one concept only. We need a pullback. We don't have a strong pullback here for us to take a trade towards the upside. That's too small. We want to make sure we can liquidate the markets by coming back into the zone, then taking our position toward the upside. And if you guys are into your Fibonacci's, once again, please make sure to put your Fibonacci tools, and you would do this just like that. What we're going to be aiming for is this liquidation zone, but not just that, guys. To keep it simple, we're looking for the 50 and the 61.8 as well. This is the level in the market that we're going to see. This is the holy grail. Does not mean it's going to go in here. It means anywhere here we could take a trade towards the upside. Not just that, guys. We want extra confirmation. So because I want to show you my little secrets on how to be profitable, and before we take this trade, I do want to tell you guys, you always want to compound your strategies together. You want to find more strategies that could come together to give you the equalization or the realization and the ideas that it's going to work together. It's like a harmony. It's like putting things together that makes sense. So right now, we're going to be talking about the RSI and looking for that key divergence. A lot of people look for divergence right here. Guys, just open up the chart, have some fun. This is about being a trader and enjoying the process. So right here, guys, we do see prices going down. And of course, that is a difference in reactions to the RSI. The RSI is going up in price while the price is going down in price. Isn't that really cool, guys? That is what I like to look at when I'm looking for a bullish divergence. Now we have an idea that price can go towards the upside. Really, really cool stuff. So if that is the case, what we're going to be doing is this is going to be a perfect idea that we're going to be looking for. We got a 50 and a 61.8 retracement. We have a key level in the market that we can act as a resistance and support zone. We have a beautiful divergence. This is playing out the way it's supposed to. So now we're going to look for our retracement. Then we're going to see a push to the upside. Let's see exactly what price does right here, guys. So price comes back into our bubble. Right here, we do have a beautiful candle, okay? So this is called an inverted hammer. Inverted hammer is showing us right on top of support. After it got liquidated, we're going to see pushes to the upside. If you hold off on price and you wanted to see another candle formation, absolutely you could do that. But more or less, guys, put your patterns into work. I'm a pattern trader. I love trading my patterns. It's very simple. Right here, we have a beautiful trend line. So now you got liquidated. You could enter the trade. You could take some profits off the trend line, or simple as it is. If you miss this opportunity, what are we going to do? Very simple. We're going to wait for a breakout retest and we're going to get into that trade. Regardless, we understand we're at the very bottom because of divergence, because of key levels of support and resistance, because of 61.8 and 50% retracement of the Fibonacci retracements, but more or less, it is because of the understanding of break of structure and change of structure. Once we have a break of structure, that's a continuation. We want to see a change of structure for us to come back down to the very bottoms or the tops, liquidate that, then continue the markets towards the downside. The same concept put upside down for this to be a bullish scenario. So let's let this play out and see exactly what we do here. So perfect, we're finally seeing these key breakouts. We have some retests of structure. We're looking exactly towards these levels that we're seeing some wick rejections. And if I take this level and move it towards my left-hand side for my structures, you can see how much times it acted as support. That is awesome. Now we're seeing that price action is trying to jump towards the upside. And of course, if you know how to restructure and look at this chart, this is right away an area that we're going to take profits. Reasons why we have not broken this structure. And this is such a great confirmation. If you took a buy here, we're going to take our first profits there. Of course, price can run a little bit higher and go from there. But of course, if prices do break the 0.0012 level, we're going to go push a little bit lower. So this is such a simple way, guys, of how I trade. And this is how I put my analysis together. This is just a little scratch of the iceberg and what you will learn in my course, guys. If you do want to apply for my course next year, I am going to be taking on a little bit more students. I do want to share the wealth by sharing the knowledge every single day, guys. This is beautiful price action that you can learn every single day. And the reasons why a lot of traders lose is because they believe certain people on the internet that cannot show you day by day how to trade. I've been trading OMI for the longest time. Trust me, guys, a lot of people said OMI cannot be traded. I've been trading OMI to the best of my abilities and I have been profitable no matter what. Everybody's looking to buy OMI and being an investor. And now slowly, I think this community is starting to realize traders are slowly winning. And if you want to be a part of the trading group, please make sure to like, share, and subscribe. And next year, I am going to be making a free Telegram group that's going to be providing free signals only to those people that want to be professional traders. And this is going to be absolutely free. And I want to make sure I can give the opportunity to you guys to make some money and believe in this project. And if you guys do like this video, please make sure to do me a solid favor. Please make sure to like, share, and subscribe. Thank you so much from the bottom of my heart. You guys are amazing. Thank you once again. Have a great day. Take it easy and John out. Peace.